is Dan with Option Thinker, optionthinker.com, and he's going to be having us take a look at a couple earnings plays this week. Dan, what am I looking at?
We're going to look at eBay. So if you could throw up the option chain for eBay.
Sure thing. Let's take a look here. So that's the chart going into options.
So we'll look
And
at the at-the-money calls that expire this Friday, the 10th.
all right, great. So we're looking at the 40s, or should we be looking at the 41s?
The 41, let's take a look at. Okay.
All right. So it looks like
What's the implied
41.
volatility there?
The implied volatilities are 98.5%.
Okay. And then we'll look 2 or 3 weeks down the line.
Okay. You think 2 weeks, or should we go, or just look at both?
We could try 2 weeks.
All right, 2 weeks out, 45
Okay.
implied volatility.
Right. So 40 double 45 is 90%.
Yep.
And then you take another half of that 45 would be 22 and a half. So that'd be 112 and a half we would need. So that falls short of what we want to do. Okay.
Mm-hmm.
So that one we would take a pass on. Okay. I mean, it may wind up just sitting right here at this price, in which case it'd be a winner. But yeah, you want to stick with that. If it's not at least 2.5, I think what was yours 3 with Apple, which wound up being a winner.
Yeah, that's correct. Yep.
And I can't think of the one beforehand, but it was a full 3.5. Wound up being a loser, but it was a minuscule loser for the amount of movement it was. Oh, Amazon it was. Yeah.
Correct.
Okay. And then another one you can look at is Disney, which is after the close tomorrow.
Great. So 84.5 is what it's trading at. So the 84s.
And now let's look at the December 1st, which would be 3 weeks for that. So 84.5 for the
Oh, no. So the implied volatility, I was looking at the strike price. So the current price is trading at $84.55.
mhm.
And so the 84 strike is 86.18%.
Oh,
Is the
that's very
implied
close.
vol.
Yeah, to what the strike price was, although it obviously doesn't relate at all.
Right. So December 1st, 84 strike implied volatility is 37.5.
Okay, so that would be 75 would be double. Okay, another 37.5 would be, yeah, wouldn't even be close right now. It'd be like
Right now.
or something. All right.
Right.
But it isn't this afternoon. Okay.
That's correct.
Sometimes the day of it really pumps up, and it's also will have only 3 days left versus or 2 days left after the close tomorrow versus 3 days left. I mean, the ideal scenario is if you can get it when it expires on Thursday, because then the very next day, all the time value vanishes that particular day.
Got it. Right.
So,
Okay, well, we'll look at Disney again tomorrow, and if the implied volatility at the money strike price in the front month is 2.5 times the at the money implied volatility 2 weeks or 3 weeks out, then we'll put on a time value spread.
right. Mm-hmm. So right now it's nothing that says, boy, I got to do this, so best always pass on situations like that. So.
Won't lose money sitting on your hands, right?
Right. Mm-hmm.